Hello and good morning, everybody. You're with Martin Penev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting with the events from yesterday. U.S. initial jobless claims down to 264K versus 290K predicted or expected, and 287K previous. U.S. industrial production up by 1% versus 0.4% growth expected and 0.2% decline last month. Philly Fed manufacturing index also up 20.7 in October versus 19.8 expected and 22.5 previous. The house price index prints 54 level versus the 59 expected and previous, and then we move along to the Canadian manufacturing sales, which is with a decline by 3.3% versus 2% downtick expected and 2.9% growth last month. Canadian foreign securities purchase huge. They're 10.3 billion. Versus 4.3 expected and 5.2 previous readings. Basically, FX traders has managed to enjoy the trend during the U.S. trading session, thanks to U.S. data and surprising remark from the Fed hawk, Mr. Bullard. After seeing the risk aversion move during the Asian and London sessions, Forex bulls were relieved to see Uncle Sam's better than expected initial jobless claims, industrial production, and Philly Fed manufacturing numbers. The reports hinted that the economy is still doing well despite fears of global growth slowdown and the Fed's withdrawal of stimulus. Quantitative easing is ending up this month. What really fired up the markets, though, was Fed member James Bullard saying in live TV interview that the Fed should consider extending its bond buying program beyond what was scheduled. He cited that weaknesses inflation and inflation expectations as reason for the BS. This was surprising, not only because Bullard was a known hawk, but also because the option was never really on the table. Not surprisingly, the idea that the Fed might continue supporting the economy did wonders for the risk sentiment. The S&P 500 jumped from 0.9 intraday drop to end the day with 0.1% gain. The Dow Jones Industrial Average capped the day with only 0.15 decline, and 10-year Treasury yields jumped back to 2.174%. Currencies. The risk appetite was also evident in the forex markets, with low-yielding currencies like the dollar and the yen taking hits. The euro-dollar jumped 64 pips to 1.2805. The cable rocketed to 1.6100 area. The Aussie versus the dollar rose by 46 pips to 0.8757. The Kiwi versus the dollar shoot up by 26 pips to 0.7940. Meanwhile, USD JPY went up by 56 pips to 106.37. British pound versus the Japanese yen rocketed by a ridiculous, it's a good term, 203 pips to 171.19. Euro Japanese yen saw a 140 pip rally to 136.21. All major events from the calendar are from Canada and US today, starting with Canadian CPI and core CPI month on month, year on year. At the very same time, Miss Yellen, the Fed chair lady, will start her speech, and we will be already looking at the housing starts and also building permits in the US. An hour and a half later, the results from the Reuters University of Michigan survey of personal consumer confidence in economic activity will also be released, and we are expecting to cause quite some volatility on the trends. That was all from me from today. Thank you very much for your attention. Cheers. Bye-bye.